Hello, my name is Yuya Shimizu. I am the Chief Investment Officer of Hibiki Path Advisors. It is very nice to welcome you to my new presentation about a company called Mandom. But before that, let's start with reintroducing my own company, Hibiki Path Advisors. We were established in 2015 in Singapore, and my focus has always been small to mid caps in Japan. I love companies with quality business, quality cash flow, or extremely high market share, which leads to strong pricing power. We actually do a lot of engagement activities, including sending out letters and making presentation to the management of the company we invest in order to narrow the gap between the intrinsic value that we believe it to be and the current share price. So one of the efforts are that we write letters to the companies and then we publicize them so that all of the other shareholders and potentially interested investors will see our proposal and take advantage of that to discuss further their opinion with the management. So we are just trying to increase the dialogue and discussion between the management and the investors so that a lot of views can be reflected to the running of the business as well as into the share price. So now let's move on to the new company we have started investing since last year, a company called Mandom. As you see here in slide number 4, Mandom is a very unique company focusing on men's cosmetics. Well, to be honest, it originated as a men's cosmetics company, but now about 45% of their total revenue are also women's, ladies' cosmetics. But their strengths actually still lies in men's cosmetics with the brand you can see here like Gatsby and Lucido. Also, the other feature about this company is that it is also extremely strong in Southeast Asian market. This Gatsby brand you see on the left upper end of the slide is also very well known in Indonesian market. Mandom actually started to invest in Indonesia a long time ago, around 1960s. So, still, or after it has grown so much, about half of the revenue comes from outside of Japan, mostly in Southeast Asia. You can see here that the market cap is still very small, 430 million US. And unfortunately, after COVID, its earnings recovery has been difficult. Especially in Indonesia, they have had 5 years of consecutive earnings loss in Indonesia. So, with that said, price to earnings, because of the depressed earnings, is 22 times. However, they have made a big investment both in factory in Japan and in Indonesia, so that is making their depreciation cost a little bit high. And also, they have a very high net cash, which makes their EV/EBITDA 3.5 times, extremely cheap in our view. Price to book used to be around 2 times in the past on average. Now it's 0.9 times. And lastly, their net cash on the balance sheet divided by their market cap is 55%. This is extremely high compared to their other peers, which you can see actually in my proposal letter in the table. So today's aim of myself speaking to all of you is to introduce our letter, our proposal letter to Mandom, which we wrote last month, and finally we were able to translate it into English. So we are providing a few important proposals that the company should implement within this proposal letter for them to accomplish maximization of corporate value to welcome their 100th year anniversary in 2027. It is a very important period for them to generate a good corporate value to aim for another 100 years. So let's just speak briefly about why we are interested in Mandom on the qualitative side. On slide 6, I pointed 3 things here. First of all, Mandom is a brand company. Its men's brand Gatsby, extremely famous, Bifesta, Pixie, also famous, not just in Japan, but also in Indonesia. Silky Girl, which they have acquired in 2018, is extremely successful in Malaysia. And now, they are starting to produce more high-end brands in Japan, such as Aono, which I personally use and I love the quality of this product. The second point is that Mandom has a unique DNA after suffering 2 major crises in their history. So we like companies who go through these stressful periods, struggles, and then learn from that to recover and then grow further. We believe Mandom is one of these companies. Unfortunately, they are suffering a very difficult business condition right now and going through a restructuring, both in Japan and in Indonesia. Based on their experience and DNA, we believe that they can go through, but we believe they should improve themselves further, not just thinking about P&L, but also about balance sheet, about return on equity, and about branding going forward. The third point, which I've mentioned already, is that they have a very strong brand recognition in Southeast Asia, especially in Indonesia. I like these 3 points and the fact that valuation has fallen to one of the cheapest level in the past 20 years history. So the level we think as an intrinsic value is about 3,050 yen per share, which is about 130% upside from current share price. We use simple DCF with extremely conservative free cash flow and reasonable weighted average cost of capital. We believe the company can grow further, but we assume 0% of terminal growth rate. So you can see, even with the 3,050 yen target intrinsic value, which we calculated, is still extremely conservative. Now, about the issue Mandom is facing right now. By the way, we outline all of this in very much detail in the letter. So if you like to go into these details, please read the proposal letter. And if you have any questions, come to us, or actually go to ask the same question to the company. So 3 issues here. People think Mandom is Gatsby company, which actually is true. I think about 30 to 40% of their revenue comes from Gatsby brand, so it is a core brand, of course. But the problem is that they also have so many other strong brands like Bifesta, Pixie, Silky Girl, etc. And it's not really disclosed in numeric terms or about the brand story in the investor presentation materials. So we think it's sad that they have so many nice products and investors don't really see it or understand it. It is very important that they actually try to show off, making a strong brand equity story also with other non-Gatsby brands. The second point is actually about their Southeast Asian business. We fully understand that currently it is in difficulty. But it's actually in difficulty with Gatsby brand in Indonesia. For example, their brand in Malaysia, Silky Girl, is doing extremely well these days. So even this Asian story, investors don't really get to hear much about it in their investor presentation materials. We think that's a shame. They should actually tell this story to investors proactively and aggressively. The third point is about the balance sheet, of course. We understand they're going through challenging days and they're trying to recover their earnings, and we support that direction, of course. But with that said, their capital allocation or their balance sheet management became very conservative. So even with the earnings decline period, the net cash actually increased dramatically over the past few years. And this, of course, even if their earnings will recover in the future, return on equity won't become so high. This is a problem, a potential problem, which may lead to low price to book multiple going forward, even if their earnings recover. So in the presentation, we made 4 points in our proposal. First of all, we ask for good disclosure of each brand and convey each brand's narrative to the market so that people become aware of their brand value. Secondly, we are asking them to disclose how they are differentiating in Asia. They're pioneer in Asia, and well, actually it's written in the letter, but their competitors are actually buying small cosmetics company in Asia with extremely generous pricing, which I mean by extremely high price. And if you look here, Mandom is very, very deeply discounted to intrinsic value, and to be honest, they have actually a strong network and brand in Asia already. There's a significant disconnect here, so we are telling the company that they should have a strong differentiation story outlined to investors, taking advantage of their early entrant positions. Number 3, we ask this to all of the company we invest, but it's basically increasing the alignment of interest between the company and shareholders. Simply asking that they should own more shares through equity compensation or equity ownership program. Then lastly, number 4, having done that, increase the alignment, we ask them to aim for double-digit return on equity goal, which require a little more aggressive and forward-looking capital allocation, which we proposed 5% dividend on equity, as well as 5 billion yen purchase each year on their share buyback. Again, the details of these proposals are written in the letter, and we have encouraged the management to discuss these points with all of their shareholders and potentially interested investors. We are just hoping the management to take advantage of this low stock price, and then we create value together and benefit from them together. We hope the company to listen to our proposal. We are hopeful, and then they come back in a growth trajectory to be proud of being a 100-year company. We are supporting the management strongly, and we hope other shareholders and potentially interested investors to also look into it, how they're doing. But first of all, if you can read our proposal letter, which is more than 40 pages, I'm afraid, it should be fun. So, we welcome you to join our game to interact with Mandom. Thank you very much for listening, and please keep in touch. Bye-bye.